After more than 2 years under Javier Milei's administration, the land of tango, soccer, and milanesas has taken a 180-degree turn. The reforms have been radical and far-reaching. In less than a year, Argentina went from spending 13 GDP percentage points more than it collected in revenue to running a surplus, which explains why inflation has fallen from 300 to 30%. Of course, we all know this didn't come without a cost. The country entered a brutal recession, though to everyone's surprise, the recovery was very rapid. By the end of 2024, economic activity had already returned to pre-adjustment levels, and with the March 2026 data on the table, the most recent we have, Argentina is producing more than at any time in its history. Obviously, all this is impressive, but if things are going so well, why are we seeing news stories like this?
Corporate delinquencies are rising, and nearly 22,000 companies have reached the most critical level of debt. A report based on data from the BCRA shows that the corporate delinquency rate climbed to 3.1% of total debt, compared to 0.9% a year ago. The increase in delinquency is not limited to the business sector. 26.9% of those with any debt are in arrears, which amounts to 5.3 million people.
For many, the Argentine miracle has only happened at the macro level. Yes, GDP is growing and inflation is under control, no one doubts that. Yet these two factors aren't translating into what they should: higher wages that allow Argentines to live better. And don't think that only public sector wages are at rock bottom as a result of the chainsaw cuts. No, although inflation has fallen dramatically, the private sector can't make wages grow faster than prices either. Of course, saying that the macroeconomy is doing well and the microeconomy is doing poorly is an oversimplification. There are many Argentines who are already benefiting greatly from the new model. The thing is, we're witnessing the emergence of a two-speed Argentina with very clear winners and losers. The question is, why? Why are so many people still not feeling the success of Javier Milei's economic program? Is it just a matter of time, or will the gap between these two Argentinas keep getting wider? Well, in this video, we're going to take a detailed look at it. But first, if you're interested in the world of investing, if you want to learn how to manage your savings, protect yourself against inflation, and figure out how to make money beyond your day job, I've got some news for you. At Visual Factory, we've created the Visual Factory Club, a newsletter where every week we send out free content focused on essential financial education. The ABC of what everyone should know to understand the stock market, financial markets in general, investment platforms, how to assess investment opportunities, and which markets may have more or less potential. Because of course, if you want to invest your money so you're not at the mercy of your country's economic instability, you at least need to understand the basics of the financial world. In the Visual Factory Club, you'll learn all of this completely free of charge. Through the link below and this QR code, you can sign up for the club and start receiving the upcoming editions. What's more, when you sign up, you'll receive a dossier where I explain, in a clear and simple way, the most essential investment concepts. What multiples or the PE ratio are, what indices are, ETFs, derivatives, funds, EPS, you get the idea. After that, every week you'll receive additional materials and market analysis to help you stay informed about what's going on. And by the way, the sooner you sign up, the better, since we send each episode of the series by email, and every edition is unique. If you're not subscribed, you might miss some of them, and you won't be able to access them later. But with that said, let's get into the video. $10 billion. That's the new purchase target the IMF has imposed on the Central Bank of Argentina. And nothing in recent weeks has better illustrated the strength of Argentina's macroeconomy than this purchase target. You see, reserves have always been the Achilles heel of Milei's program. The Libertarians have had to ask the IMF for an official pardon several times because they kept all their promises, except this one. But that just changed. In less than half a year, the BCRA has already purchased all the dollars it had promised the IMF. This is the second longest buying streak in the country's history, and at this rate, by the time you're watching this video, it may have already surpassed the 11 billion mark set during the 2006 to 2007 period. The difference is that back then, it took 160 trading days to reach that figure. Now, it's taking just over 100. What's more, the purchases are accelerating. At this rate, it will end the year with between 17 and $24 billion, closer to 24 billion if it doesn't lose steam. But that's not the most interesting part. We're telling you this because of how it all relates to two other key variables: the exchange rate and inflation. In the long term, accumulating reserves should strengthen the peso and lower inflation. After all, these dollars serve as a cushion that instills confidence in the system. But in the short term, something very paradoxical happens. The peso depreciates, the exchange rate rises, and that leads to inflation. The reason? Very simple. When the central bank buys dollars, it first has to print pesos in exchange for the greenbacks. And we all know what happens when you turn on the money printing machine. Nevertheless, none of this has happened. The exchange rate has remained virtually flat for months, just when the floating bands were widened in case volatility spiked. And inflation, which had been rising at a somewhat concerning rate for half a year, has fallen sharply again to 2.1% per month. As we mentioned, this is quite a feat for Argentina's macroeconomy. That said, there are those who believe the exact opposite, that the exchange rate is too high and inflation is too low. Mind you, this isn't as crazy as it sounds. When inflation falls below 3%, it seems that something breaks down in Argentina. Here's an example. In March 2026, inflation hit its highest level in over a year at 3.4%. Nevertheless, GDP grew by 3.5% monthly. That's absolutely staggering. And yes, it's partly so high because the economy was recovering from a slump, but the rebound was much steeper than expected. In contrast, inflation has now fallen to around 2.1%. And although we don't yet have data on economic activity, both industrial production and revenue from certain taxes, such as VAT, suggest it will be a pretty bad month, perhaps around negative 1.5%. Now, we're not saying that whenever inflation falls, economic activity falls with it, but there does seem to be a troubling correlation. And the fact is, this is no coincidence. It's a direct consequence of what we've been telling you, a two-speed Argentina. On the one hand, we have the export-oriented industries, which are booming, and on the other hand, we have the domestic sector, though we could also include construction and other services. Here, we are mainly talking about mining, energy exports, and agriculture. In saying that, don't think that the agricultural sector is generating so many dollars just because of good luck with the harvests. Exchange rate stability and tax cuts have been crucial for encouraging business owners to invest. While the others continue to grow, the industrial sector has not yet recovered from the Malay shock. In fact, it has been declining very gradually for a year now. Construction is a more complicated issue because it depends heavily on how much the government wants to build, and Milei has brought public works to a standstill. But this two-speed Argentina isn't just about businesses, it's also about consumers. Consumption, taken as a whole, is very high and continues to grow. In 2025, despite the typical narrative that companies are doing very well and ordinary Argentines are doing very poorly, consumption grew and investment fell. Even so, it's important to understand which areas of consumption are growing and which aren't. In general, supermarkets and everything related to the consumption of everyday goods are down. Either they haven't recovered from the shock, or they have, but they aren't growing as much as GDP. In 2024, mass consumption fell by 16.4%, and in 2025, it grew by only 2.5%. So how is it that aggregate consumption is so high? Because Argentines are buying many more long-term products. Sales of household appliances grew by 34% in 2025, new car registrations by 48%, and people are also buying much more furniture. This may seem strange, but the explanation is very simple. Argentina was one of the world's most closed economies. Exports and imports combined barely reach 30% of GDP, while in Chile, Mexico, or Paraguay, they exceed 65%. Little by little, this is changing. Malay is opening up the economy, and that has flooded the country with cheap imports, particularly industrial goods. In fact, imports have grown by more than 50% in just 1 year. That's why Argentines are buying so many household appliances. Before, they relied on Argentine industry, which was extremely expensive and inefficient. Now they have other options, but they still depend on domestic production for many everyday goods. And this same dynamic also explains what's happening with businesses. With the opening of trade, exporters are booming, but many domestic companies that once had a near monopoly can no longer compete against foreign products. A very clear example is Fate, a very iconic tire factory that also makes calculators. For some reason. That closed shortly after China flooded the market with products at half the price. Do you remember the delinquency rate we mentioned at the start of this video? Well, it follows a very clear geographic pattern. Delinquency rates for businesses, and also for households, are very low in the export-oriented interior provinces, such as Rio Negro, Neuquén, or even Santa Cruz, but much higher in the interior provinces that are more dependent on local industry and government transfers, such as Formosa or Chaco. Of course, there are exceptions. Buenos Aires has a very low delinquency rate despite exporting very little, but this isn't all that unusual. After all, large cities have many non-tradable services which generally do not depend, for better or worse, on trade liberalization. Do you understand now why we say that two-speed Argentina isn't just about macroeconomics versus microeconomics? In this other chart, you can see the difference in the consumer confidence index between the provinces and the Buenos Aires metropolitan area. Normally, the two regions are on par, but during Macri's administration, the provinces had much higher confidence than the capital. Later, the opposite occurred, and under Milei, the same situation as under Macri has resurfaced, but now on steroids. It's not that businesses are doing very well and consumers are doing very poorly, it all depends on which businesses and which consumers. And ultimately, this is what will determine whether Milei's program succeeds or not. Will Argentina manage to create jobs and wealth outside the export sector? Well, here we have some good news, and some bad news. If you don't mind, let's start with the bad news. It wouldn't be the first time an experiment like this has failed in Argentina.
There is an example in Argentina of economic liberalization that did not result in the expected reallocation of resources and employment. It was in the 1990s, during the convertibility era. The unemployment rate rose to 20%. Many people who lost their jobs turned to driving taxis, which resulted in a very significant drop in their real income.
One thing must be made clear. Argentina's industrial decline is nothing new. In the 1970s, industry accounted for between 25 and 30% of GDP. These days, it's only 15%. Normally, this would be great news because the share of the industrial sector has fallen in all wealthy countries. It's even falling in China. But in Argentina, this has not translated into high value-added jobs in the service sector. In fact, it hasn't led to anything at all. It has simply disappeared, leaving a void of poverty and unemployment. And the worst part is that when attempts were made to fix all this in the 1990s, they failed as well. Without a stable capital market, labour flexibility, and confidence that the rules of the game won't change with the next administration, resources don't flow from the least profitable companies to the most productive ones. You have destruction without creation, and herein lies the key. Every economy needs both, to pull out the weeds and let the crops grow. Many people both inside and outside Argentina point to South Korea as an example to the contrary, that local industry must be protected until it develops and is able to compete with the rest of the world, that they need to wait for the weeds to transform. What they don't usually mention is that South Korea ran a trade deficit during this process. There was some protectionism, yes, but if machinery had to be imported from abroad, it was imported. The positive aspect is that, this time, there are more reasons for optimism. Imports are growing, and not just thanks to consumers, but also to businesses. And with an increasingly stable macroeconomy, the benefits of the export industry will begin to flow into the rest of the economy, especially thanks to news like this.
Fitch upgrades Argentina to B-, outlook stable. Argentina's rating reflects structurally improved fiscal and external balances, progress on economic reforms, improved prospects for foreign exchange reserve accumulation, and our expectation that the government will secure adequate financing to cover debt obligations.
Currently, the dollars generated by agriculture, mining, and Argentina's other leading sectors flow into the treasury or the central bank to boost reserves, build confidence in the currency, and ultimately stabilize the exchange rate without triggering inflation. But if Milei manages to attract more investment and refinance his debt at lower rates, he'll have room to give the rest of the economy some breathing room, for example, by lowering taxes further, or by allowing the exchange rate to depreciate, which is precisely what typically happens when a country opens up its markets. With reserves and confidence in the government, this can be done without causing inflation. The good news is that this is already happening with a B debt rating. Institutional investors around the world could now begin investing in Argentina, and the country risk premium, the extra interest rate Argentina must pay to finance its debt relative to the US, has fallen to around 430 basis points, a level at which it is now feasible to refinance the debt in the markets rather than spending reserves to pay off all loans at once. However, there's still a huge challenge ahead before this can become a reality. Argentine debt continues to trade well above that of other B-rated countries. We're talking about roughly 130 percentage points more than many neighboring countries with similar economic fundamentals. And what's worse, the gap widens with longer-term loans. There's a very simple reason for all of this. The markets still don't trust that Milei's reforms will be permanent. We saw it in the midterm elections. Argentines were buying up dollars like crazy to protect themselves from the hypothetical scenario in which the opposition would win a majority in both chambers. To give you an idea, the elections were last October. Well, between September and October, they bought $8 billion. In the following 2 months, only 1.3. The polls had predicted a pretty bad outcome for the Libertarians, although in the end, they managed to turn the tables. The problem with a two-speed Argentina is that if half the country doesn't see improvements, it could derail the economic program. In other words, this isn't just an economic issue, it's also a political one. And here there are 2 options. Either you carry out an extremely rapid and irreversible reform, such as dollarization, or you proceed gradually, prioritizing the goal of minimizing the number of losers over economic efficiency. Interestingly, Milei has opted for the former, the chainsaw approach. He has been very radical with his reforms, but he has completely ruled out dollarization. No matter how far-reaching they may be, the reforms are not irreversible. The good news is that the markets are beginning to trust not only Milei, but Argentina as well. In January, 85% of the debt issued in pesos was set to mature before the 2027 elections, where Milei is staking everything on the outcome. Investors, both domestic and foreign, were reluctant to lend money to the government in a currency that might depreciate if the political landscape changed. But today, 40% of the debt matures after the elections. Granted, this is partly because half a year has passed, and there are simply fewer days left until the elections, but that doesn't explain such a large difference. In short, Javier Milei's chainsaw approach has created many winners, but also many losers. This is nothing unusual. It happened in Poland when it abandoned communism, and in South Korea during General Park's revolution. The question is whether, over time, the benefits will reach everyone. Historical evidence tells us that if you do things right, the answer is a resounding yes, and Argentina is on the right track. The question now isn't that. It's whether Milei will manage to stay on that track, or whether he'll be forced to abandon the mission. In any case, now that we've gotten this far, it's your turn. Will we continue to see a gap between exporters and domestic industry? Or on the contrary, will the 2 speeds begin to even out? Will Milei manage to hold on to power while defending the fiscal surplus? You can leave your answers down in the comments. And if you want to really understand what's happening in the markets and learn how to manage your money with more confidence, join the Visual Factory Club. It's completely free and the link's in the description. As always, don't forget that here on Visualeconomik, we release new videos every week, so subscribe to this channel and click the bell icon so you don't miss any of our updates. If you like this video, hit like and we'll see you in the next one. All the best.